Welcome to part 2 of the discussion on partnership or dissolution, the accounting for partnership dissolution. So on the last video, we have discussed yung computation related to the purchase of interest. So let us recall that when a new partner has been admitted, it can either be a purchase of the interest, it can either be all 100% or less than 100%, or an investment in the partnership. So let us proceed by looking at another scenario. What happens when the assets of the new partnership has changed, or the fair values of the assets is not the same as what is recorded in the books of the partnership after it has been dissolved? So when a partnership has been dissolved but it's not liquidated, a new partnership is created. The assets and liabilities of the new partnership should be restated to their fair values. So kung nag-create tayo ng new partnership by virtue of the dissolution of the old partnership, we have to identify if there are changes in the fair value. So kung walang changes, madali lang. Kasi i-forward mo lang yung balances on the partnership books to the new, from the old to the new partnership books. However, if there are changes, we have to restate uh, the items to their fair value. So what happens to the adjustments? The adjustments to the assets and liabilities is allocated to the existing partners first before recording the admission of the new partner. So it is proper to allocate any changes in the fair values to the existing partners, whether it is an addition or a reduction on the value of the assets or the liabilities before admitting the new partner, dahil yung fair values na yon ay result of the efforts and the performance of the existing partner. So it is just fair and equitable to recognize the adjustments and allocated first to the existing partner before you admit the new partner. So let us illustrate this. Okay, let us illustrate this. C purchases 20% of A and B's capital interest for 100,000. The carrying amounts and fair values of the partnership's net identifiable assets immediately before C's admission are as follows. So binigyan ka ng data. So, meron tayong cash, equipment, accounts payable, and the equity accounts for A and B. The fair values has also been tabulated to compare whether there are increases or decreases on the assets and liability accounts. So, for cash, walang changes. For equipment, it has increased to 390. So, merong increase na 50,000. So, accounts payable, no increase or decrease. Yung A capital and B capital should not be restated to their fair values because it will not be applicable in the circumstances. We cannot measure yung fair value of these capital accounts at this instance. So requirement, we provide the journal entries and then we compute for the partner's capital balances after C's admission. So let us take a look on this. So tandaan natin yung figures. Si C ay bumili ng 20% ng capital ni A at B for 100,000. Okay, let us take a look. Ang sabi, we have to restate muna the asset accounts before we admit the new partner. So let us look at this solution. Since, based on the previous problem, the equipment has increased to 50,000, then you have to debit equipment 50,000. And then, how do we recognize yung increases doon sa equipment kay A at B lang dahil sila lang yung existing partner before admitting C. So, how do we recognize it? Based on the profit and loss ratio. Tingnan nga natin, how do we get 40-60, ayun, naka-indicate siya dito. 40% and 60% ang profit and loss sharing ratio nila. So, 50,000 times 40% is 20,000. And then, 50,000 times 60% is 30,000. So, this is the journal entry to recognize the restatement of the equipment to its fair value. Next, we have, let us analyze yung, i-tabulate natin yung kung ano na ba ang adjusted capital after recognizing the adjustment on the fair value of the equipment. Before, the unadjusted capital, tingnan nga natin, 130 and 220. 130 and 220. Total of 350,000 na net assets of the partnership. The share in the revaluation for A is 20, for B 30,000. So the adjusted capital now is 150 for A, 250,000 for B. Total of 400,000. So ma-observe mo na nag-increase yung net assets ng partnership because of the restatement of the fair value of the equipment. So now, based on this adjusted capital after restating the equipment's fair value, we have to admit the new partner. Ang sabi, 20% daw ng capital ni A at B ay bibilin ni C. So since the purchase of interest is recorded via the transfer within equity. So, kung magkano ba niya binili yun? 100,000. So, kung magkano man ang gain or loss dyan, ay personal gain or loss lang ni A at ni B. So, let us take a look. A capital, 150,000 times 20% is 30. 250 times 20% is 50,000. So, ang capital credit lang kay C ay 80,000. So, yung 20,000 na difference doon, dahil 100,000 ang binayad niya, would be a personal gain for both A and B. For both A and B. Okay. We record the admission of C. So now, based on the journal entry and the admission of the new partner, we can generate the new capital contribution table. So we look at this. The capital after admission for A is 120, for B 200, for C 80,000. A total of 400,000. So walang changes sa net assets ng partnership because it is a purchase of interest. So tinransfer mo lang yung equity ng bawat ng selling partner to the new or the buying partner. So this is your requirement B, the partner's capital balances after C's admission. Okay. What about when it is an investment in the partnership? So a new partner may be admitted by investing directly into the business instead of purchasing. So imbes na bumili sa existing partner, magi-invest na lang or magdadagdag ng investment. In effect, tataas ang net assets ng partnership. This is treated as a transaction between the new partner and the partnership. Since it is an investment, yung new partner, ang katransak niya na yun ang partnership. Hence, dahil katransak mo ang partnership, it will be recorded in the books of the partnership. So, kung magkano man yung binigay niya, you have to debit. For example, nag-contribute siya ng 100,000, you debit cash and then you credit the capital account. This is referred to as equity transaction with an owner, hence no gain or loss is recognized also. Okay, let us illustrate this for us to easily comprehend. Ang sinasabi lang dito sa equity transaction with an owner ay we have to recognize kung magkano ang capital credit niya at yun ang papasok sa capital accounts noong new partner admitted. So what happens when the incoming part, so dahil dito sa scenario na ito, ang sabi niya dito, the equity transaction with an owner, hence no gain or loss is recognized in also kahit investment in the partnership yan. So wala kang makikitang gain or loss on the partnership books. So let us illustrate this. For example, the incoming partner's investment is equal to its capital credit. What happened? you have to debit the invested asset, for example, cash or equipment, and then you credit the incoming partner's capital. So, walang problema if the incoming partner's investment, yung ibibigay niya, ay same sa kanyang capital credit. The problem lies when the incoming partner's investment is greater than the capital credit or less than the capital credit. So, paano mangyayari doon? Ano sir, anong mangyayari doon sa investment na mas malaki kaysa doon sa capital credit? What happens to the excess? The excess will be treated as a bonus to the old partners. It will increase the old partner's capital and it will decrease the new partner's capital. What happens when it is less than? Kung less than naman, mas maliit yung pera niya kaysa kumbaga maliit lang yung pera niya pero malaki ang ibibigay sa kanyang capital credit. Sir, bakit nangyayari yon? There are instances that merong qualities yung new partner. For example, expert siya sa ganitong field or sa ganitong industry, gusto mo siyang maging partner in your business. So, merong intangible feature na nire-recognize kaya malaki ang binibigay na capital credit kahit maliit lang ang kanyang ibinigay na asset na cash or equipment cash or equipment. So, it is treated as a bonus to the new partner. It will increase the new partner's capital. However, it will decrease the old partner's capital. So, this will serve as a guide in looking at the further illustrations. Let us illustrate first yung scenario, case 1, wherein the investment is equal to the capital credit. So, tingnan lang natin. When D invests 60,000 cash for a 25% interest in the partnership's net assets and profit, the requirement is to provide the journal entry to record the transaction. So, ito ang data natin. The capital is given, the profit and loss sharing ratio is given. So, kapag ganito yung problem, we look at investment. You look at investment. So, the key term is invest. So, dun sa previous problem, we will look at purchases. So, bumili siya ng interest at ng existing partner. Pero dito, investment. So, you have to qualify first kung ano ba ang condition nung admission ng new partner. Is it a purchase of interest or is it an investment in the partnership? So, in this case, nandito tayo sa investment in the partnership. So, since ito ay investment in the partnership, magkano ang ininvest niya? 60,000 para sa 25% interest in the partnership assets. So, ang first step dyan is to identify kung magkano ba ang net assets ng partnership. So, the net assets before admission is 180. So, ito po yun. A, B, and C total, 180. Kung nag-i-invest si D ng 60,000, you add it. Investment of D. So, ang total net assets after admission is 180 plus 60, 240. Ang sabi, 25% interest daw ang gusto ni D. So, 240,000 times 25% is 60,000. Magkano ang ininvest niya? 60,000. Meron bang bonus? Meron bang discrepancy? Meron bang excess? Or merong deficiency? Wala. Because, as computed, the capital credit is equal to the investment. So, may problema ba dyan? Basically, wala. So, how do we recognize the journal entry for this transaction? You just have to debit cash, 60,000. So, mapapansin mo, sa investment in the partnership, nagre-recognize ka na ng asset account because it is a transaction between the new partner and the partnership. So, cash ka dyan, 60,000 dahil naka-receive ang partnership ng cash, and then you have to recognize yung capital credit, the capital, 60,000. So, let us complicate by illustrating what if the investment is greater than the capital credit. So, in this scenario, same capital contribution, same profit and loss ratios. So, D invests 80,000. 80,000 ang binigay niya for 25% interest. Provide the journal entry to record the transaction, determine the capital balances, and the profit and loss ratio of the partners after D's admission. So, same step ang gawin mo. Net assets before admission, 180. So, ito po yung A, B, and C. Plus, yung i-invest ni D. Kanina, 60. Sakto yung 60. Pero ngayon, 80. So, alam mo na mas malaki ang investment niya dyan. 180 plus 80 is 260 times the interest na gusto ni D na 25%. So, 260 times 25% is 65,000. So, yan ang gustong capital credit ni D. 65,000. Magkano ba ang ininvest niya or binigay niya? 80,000. So, ibig sabihin, mas malaki yung binigay niya sa partnership kesa doon sa capital credit niya. So, meron kang bonus to old partners. So, yung 15,000 na yun ay mapupunta doon sa capital ng old partners. So, let us look back at this. Sabi dito, if the investment is greater than the capital credit, it is a bonus to old partners. It will increase the old partners' capital. It will increase old partner's capital. Sabi, it will decrease the new partner's capital. Sir, bakit decrease the new partner's capital? Technically, kung titingnan mo, we are at case 2. Kung titingnan mo, dapat ang investment, ang capital credit ni D ay 80,000. Pero dahil nga 25% interest of the partnership assets lang siya, ay nabawasan yung kanyang capital credits. Kaya nga, ang capital credit mo on your solution is 65,000 only. So, how do we recognize this? You have to debit your cash, kung magkano na-receive ng partnership, 80,000, and then credit the capital, kung magkano ang computed capital credit ni D, 65,000. So, paano yung 15,000 na difference? It will be shared by the existing partners. Since it is a bonus to all partners, it will be computed based on the old profit and loss sharing ratio. Yun po yung 40, 30, and 30. So, 15,000 times 40, 15,000 times 30, 15,000 times 30. So, yun yun. 65,000, 6,000, 4,500, and 4,500. Okay. So, this is the requirement 1, yung journal entry. Next, determine the capital balances and profit and loss ratio of the partner after this admission. Well, the capital balances ay will be computed. So, si A, ang dating capital balance niya before admission is 40 plus 6,000. So, ganun lang siya. B, 60,000 plus 4,500. C is 80,000 plus 4,500. Si D naman, because he is a new partner, ang capital balance niya ay 65,000. Okay, next. The new profit and loss ratio of the partner after this admission. So, how will you compute for your new profit and loss ratios? Okay, kung mapapansin mo, ang sabi diyan, nag-invest si D, nakuha niya yung 25%. So, therefore, sa new profit and loss, automatic si D ay 25% na. Hence, yung 75% ay paghahatian na lang ni A, B, and C. So, paano nila paghahatian yung 75%? Based on the old profit and loss ratio. So, 75% times 40%, yun yung kay A. 75% times 30%, yun yung kay B. 75% times 30%, yun yung kay C. So, that is your new profit and loss ratios. Okay, let's proceed with case number 2. What happens if the investment is less than the capital credit? So, same scenario. However, the investment is 52,000. So, 180 plus 52 is 232 times 25% is 58,000. So, ang investment mo dyan ay 52,000. 58 ang capital credit kay D, pero ang ininvest niya lang ay 52. So, ibig sabihin, may bonus to the new partner or bonus to D, 6,000. So, how do you recognize the journal entry? You debit cash, 52,000. Debit cash, 52,000. And then, you 52,000 because of the receipt of the cash from D. Then, you credit D capital. Magkano yung as computed? 58,000. What happens to the 6,000? The 6,000 will be recorded as a decrease or a reduction to the capital of the old partner. So, balikan natin dito. Ang sabi dito, it will increase the new partner's capital and it will decrease the old partner's capital. So, na-decrease yung old partner's capital. 6,000 times 40%, 6,000 times 30%, 6,000 times 30%. So, yun ang proration ng 6,000 natin. So, binawasan mo ng 6,000 prorated yung A, B, and C capital. At dinala mo yun kay D. Okay. Let us look more at more items related to investment in partnership. Case number 4.1, the amount of investment. So let us complicate things. D wants to join the partnership through direct investment. D asks the existing partners how much should he invest for a 20% interest in the partnership's net assets and profits. The partnership books include a receivable from A of 8,000 and loan payable to B of 10,000. Requirement: if no bonus is allowed, how much should D invest? This item, it looks like and it sounds like a Sipale board exam question. It looks like a Sipale and a board exam question. The way it has been constructed. D wants to join, so gusto niya daw sumali dun sa partnership through investment. So, investment in partnership ito, hindi purchase of interest. So, D asks the existing partners how much should they invest. So, gusto niya 20% interest in the partnership net assets. Okay, so binigyan ka ng details related to receivable and payable account. So, same steps na with what we have done on the previous illustrations. So the net assets before admission is 180,000. So 180,000 ang net assets before admission. Since gusto ng new partner na 20% ang kanyang i-invest dun sa partnership, you have to um, segregate that 20%. Kumbaga, i-allocate mo na agad yung 20% based on the net assets before admission. So, how do we allocate this? You have to divide yung 180 na net assets before admission to 80%. So, bakit 80%? Because yung total na 100, babawasan mo siya ng 20% para ma-reflect na itong 180 ay 80% na lang. Gets mo ba? Para makuha mo na itong 180 ay 80% na lang, you have to divide. Kumbaga, ini-squeeze mo yung figure. So, 180 divided by 80% is 225,000. So, nagets mo kung bakit 80%? Because 100 minus the 20% interest na gusto ni D. Therefore, 225,000 ang net assets after admission. Okay, 225,000 net assets after admission. Kung titingnan mo yung previous example natin, di ba, ito yun, net assets after admission. Kaya lang kasi dito, hindi mo alam yung item kung magkano yung i-invest niya. Kasi yun yung tinatanong. So, you have to work back by squeezing it. 180 divided by 80% is 225,000. Then, you multiply with this interest in the net assets is 20%. Pwedeng 225 minus 180 or pwedeng i-multiply mo lang din. So, this investment should be 45,000. If no bonus is allowed, okay, how much should D invest? The answer is 45,000. Sir, I have a question. Paano po yung items na sinasabing the partnership books include a receivable from A of 8,000 and a loan payable to B of 10,000? Sir, ano ba ang effect nun? Meron bang effect yan on the recognition of the items? Wala. Because it just merely states that the books includes a receivable from A and a loan payable to B. So, ano bang sinasabi? The assumption here is since this is partnership dissolution, the assumption here is the receivable and payable accounts will continue in a partnership dissolution stage. Hence, yan ay i-carry over mo lang sa new partnership. Diba? Wala namang changes on the fair values of the items. So, you don't have to restate the items kasi wala namang sinabi. In-indicate niya lang na yung mga items na ito, the partnership books include item of receivable and item of liability for the partner. So, walang changes on the fair value. So, you have to just ignore this statement. So, if you have incorporated it in your computation, mamamali ka na. So, may mga items na ganito na it will be included pero dapat alam mo kung paano gagawin. The rules on restatement of the fair value, alala mo. Dapat naalala mo on while you are reading this. Okay, let's proceed to the next one. The adjustment to capital and cash settlement. So, for example, as this is connected, 4.1 and 4.2. After this admission in case 4.1, the partners agreed to adjust their capital balances to reflect the proportionate share in the partnership net assets based on their new profit and loss ratio. Cash settlement will be made among the partners. So, determine how the cash settlement is to be made. Capital after admission. So, ano bang tinatanong? Determine how the cash settlement is to be made. So, kung dito sa item na ito, that this investment is 45,000, so how do we recognize it? So, after admission, um, you only have to include the investment of D, which is at 45,000. So, total na after admission is 225,000. So, ang sabi, the partners agreed to adjust their capital balances to reflect their proportionate shares in the partnership net assets based on their new profit and loss sharing ratio. Cash settlement will be made among the partners. So, let us first compute. Ang sabi, since ang total ng net assets ng partnership ay 225,000, nag-agree daw si A, B, and C and D na for them to easily operate, i-equalize nila yung, no, not equalize. We compute for the new profit and loss ratio and kung magkano man yung sobra at kulang ay dagdagan ng investment. Ganon yung, kaya meron siyang cash settlement among the partners. So, let us first compute ano ba ang magiging new profit and loss ratios niyan. So, kung mapapansin mo, under case 4.1, 20% ang mapupunta kay D. So, ganito lang din sa ginawa natin doon on the last illustrations. So, kay D, automatic yung 20% kanya na. Then, yung 80% nun, dahil 80 plus 20 is 100%, yung 80% will be shared by A, B, and C. So, paano natin nahatiin yung 80% based on the old profit and loss ratio. So, 80% times 40% is 32. 80% times 30% is 24. 80% times 30% is 24. So, 32 plus 24 plus 24 plus 20 is 100%. So, ito ang gagamitin natin ngayon to compute for your adjusted capital. So, 225,000 times 32% is 72. 225 times 24% is 54. So, ganun din kay C. Then, 225 times 20% is 45,000. Na-compute na natin to before. So, kay D, walang idadagdag at walang babayaran at walang tatanggapin si D because siya yung inadmit natin as the new partner. So, based on the computation, ang capital after admission ni A ay 40, pero kapag kinompute yung new profit and loss, dapat 72. Pag kinompute yung new profit and loss, may 72,000 dapat. So, anong gagawin dyan? So, since 32% ang new profit and loss ni A, dapat magdagdag pa siya ng 32,000. So, magbayad siya ng 32,000. Then, kay B naman, 60 ang kanyang capital pero ang based on the new profit and loss ratio, ang adjusted capital niya ay 54,000 so makakatanggap siya ng 6,000. Ganon din kay C at 26,000. So, by looking at this, we determine the cash settlement between the partners. So, how do we journalize the transactions? How do we journalize the transactions? You have to debit, since magbabayad si A ng capital, it will be a transfer within equity. Kumbaga, yung galing kay A will be transferred to B and C respectively. So A will have to pay B and C for 6 and 26,000 respectively. Okay, let's proceed to the next computation, the correction of errors. I think this will be the last slide related to the investment in the partnership. So let us look at this. This is a more complicated one. In year 3, 2 years after this admission, so kasunod pa rin to ng case 4.1, the partnership earned profit 1 million. However, it was discovered that the following items were omitted in the partnership's books. Year 2 items for prepaid asset and accrued expenses, then may year 3 din tayo. Requirement, how much is the share of A in the year 3 profit? How much is the share of A in the year 3 profit? Okay, let us analyze the transactions muna. Merong omission of an asset and a liability account, prepaid asset and accrued expenses for year 2. Okay? In year 3, ang profit natin ay 1 million. Please take a look at the table. In year 3, ang ating unadjusted profit ay 1 million. However, kung wala sana tong errors na to, madali lang naman nating i-allocate yan based on the profit and loss sharing ratios. However, mayroong sinasabing omission. So since these are omissions on prior years, you have to analyze kung ano ang magiging impact nito doon sa present year na kinocompute mong profit, kasi hindi mo na pwedeng balikan yung uh, yung yung profit na na-recognize on year 2. So since this is a prior period error, you have to analyze what will be its impact on the current year's profit. So let's look at this. Kapag omission of a prepaid asset and accrued expenses, these are omissions, ibig sabihin, understated or mas mababa yung items na nakalagay dahil hindi mo na idagdag dun sa dapat na amounts niya. So for year 2, there is an understated prepaid asset na 35,000. Understated mo ang prepaid asset in year 2. Since understated prepaid asset, the book requires you to look at your intermediate accounting 3 for the detailed discussions on prior period errors. I will not be explaining more of prior period error kasi medyo mahaba yung discussion related to that. But the gist here is diba, on the prior period error, when you look at this, kapag asset-related account yung understated, the profit is understated. Kapag asset ay understated, yung profit ay understated. So, kung titingnan mo, for year 2, ano ba ang understated? Prepaid asset. So, kung asset yan, therefore, profit ay understated din. So, kung understated yan, anong gagawin mo? Mag-add ka po ng 35,000. So, okay tayo doon? Doon muna tayo sa year 2. Next, kapag understated naman ang isang liability account like accrued expenses, opposite naman po yun. Ibig sabihin, overstated ang iyong profit. So, kung overstated ang iyong profit, bawasan mo ng 40,000 ang year 2 profit. Okay. Sir, bakit kailangan mo pang ipakita yung year 2? Year 3 ang kinukompute natin because of the concept of the counterbalancing error. Kung mapapansin mo, if you will look at your intermediate accounting, yung discussion on counterbalancing errors, may mga items na kahit hindi mo i-correct on the year it happens will automatically correct itself on the next year. Tandaan mo, diba itong prepaid asset at accrued expenses, these are classified as current. Prepaid asset, current asset. Accrued expenses, current liability. So, the orientation, the concept of prepaid and accrued expenses ay 1 year. So kung itong year 2 ang pinag-uusapan natin, on year 3 maku-cure yan. Ano ibig sabihin ng maku-cure? So kung overstated siya on year 2, ibig sabihin on year 3 mag-automatic na matatanggal ang pagiging overstated niyan. Let us make an example. For example, prepaid expenses or prepaid rent. Asset yan on the first year. Asset yan on year 2. Pero pagdating ng year 3, di ba magiging expense na yan? Kasi yan ay nire-recognize mo lang naman yung prepaid rent initially as a prepaid rent, pero eventually, di ba, nagde-debit ka na ng expense and then you credit the prepaid asset. So eventually, ay kinukure niya na yung sarili niya. So after a year, dahil ang prepaid asset ay current, ang orientation or 1 year lang, on the next year, automatically magiging expense din naman yun. So, what is the effect of this understated prepaid asset on the succeeding year? So, kung ito ay kung ito ay inad mo on year 2, it will be deducted on year 3. Same is true with the accrued expenses. Kung binawas mo ito on year 2, i-add mo to on year 3 so as to counter balance. Okay, let's proceed with year 3 items. So, year 3 items, understated daw yung prepaid asset in year 3. So, ano gagawin mo? Year 3 ang pinag-uusapan. O, dagdagan mo lang, plus 50. Next, accrued expenses. Understated daw, ito gagawin mo, bawasan mo, 60. Understated yung accrued expenses, ang effect nun ay overstated ang iyong profit. So, ano gagawin mo? Bawasan mo ang iyong profit. Remember, profit ang pinag-uusapan. Ang orientation mo dito when you are adding and deducting the values. So, 1 million minus 35 plus 50 plus 40 minus 60. The adjusted profit is 995,000. Multiply it with A's new profit and loss ratio na na-compute mo dito, 32%. So, the share of A in year 3 profit is 318,400. So, you have, if medyo nalito ka on the items related to prior period error, counterbalancing errors, you have to refer to the chapter Intermediate Accounting 3 related to the prior period errors, especially the counterbalancing errors, para mas maintindihan mo ito. But my explanation, I think, will guide you as reference in analyzing these investments. So I think that ends the discussion on this part of partnership dissolution. Please continue on the next discussion video for some items related to partnership dissolution. Thank you.